Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today we're going to look at Intel stock coming off of a pretty substantial dip over the past few days when Intel came out with their earnings report. And it's kind of funny because the earnings report, if you got down to financial numbers, was actually pretty good. But they did say that they were trending behind on a couple new projects, and that really tanked the stock. So we're going to jump in and see, is Intel a buy at this current dip? As a reminder, my stock picks and projections are just my opinion, sharing here for your entertainment. Please talk to a financial professional before investing in the stock market. However, if you do enjoy videos like these, stock market analysis, personal finance tips, then please subscribe to the 40 Finance channel. Thank you to everyone who's supported the channel so far. All right, so the big news on all the message boards is this AMD's time to take over on Intel? Intel, as I mentioned earlier, had these 7 nanometer chips that were coming out, supposed to come out this year. They got pushed over to basically 2022. AMD, on the flip side, has been cranking out new products and hasn't run into the same delays. And generally speaking, AMD's management team has gotten much more favorable reviews than Intel's, at least recently. Now, all of those things being said, AMD is still way behind Intel in terms of actually making money. And that's really the key here as stock market investors. So let's take a look at Intel's sort of fundamentals and then compare that to which way AMD's trending to figure out, should we take advantage of this Intel dip as investors, or should you hop on the more popular train right now of AMD? All right, Intel stock today stands about $48. I think it's down even a little bit more after the GDP numbers came out, somewhere in the neighborhood of 47. But you see that we have a P ratio right now of 8.83. The 52-week range on this stock is $43.63 up to $70. So you're coming in about $4 or $5 over the 52-week low, which as a value investor, you have to be at least a little excited about and look into the opportunity anyway. The chart on the right is your 1-year chart, and you see last year at this time, you were trading in that $40-something range. It spiked as high, almost $70, when the market was running hot into January. During the pandemic collapse, we had a dip that's very similar to the 40s. So overall, Intel has offered a couple opportunities at this price and hasn't been able to sustain the gains that they've made coming out of it. One important call out with Intel is you do get a dividend, which is always a good bonus, 2.68% as of today's stock price. All right, so let's go back through the valuation history and see, is now a good time to buy Intel in terms of valuation? These are annual numbers posted back through 2014, and I highlighted the box there. You see in the top highlighted column, trailing PE currently at 9.15. Doesn't align exactly with the previous slide because Yahoo doesn't update the valuation measures quite as frequently. But when you have a trailing PE of 9.15 and you look back over the past, call it 5 years, this is the lowest trailing PE that we've had an opportunity to get into. From a forward PE, you've got sort of the same game, 10.95. While it's trending in the wrong direction from the trailing PE, it does actually show some value over the last 5 years. Similar story with PEG ratio. It was slightly lower at the end of 2019, but generally speaking, it's in a good place relative to recent history. Price to sales, same thing. Price to book, also running near lows over the past 5 years. All right, so from an Intel only perspective, this price right now compared to the money that they're making right now seems like a pretty good value proposition, certainly if you're interested in Intel as a standalone company. So I would say if you're ever thinking about starting a position in Intel, this could definitely be a good time. And of course, if you're a long-term investor looking to bring your cost basis down, then it's certainly an excellent time to add more to your portfolio. But of course, the past is easy to project, and most stock market investors are looking towards the future. And so I want to kind of compare AMD to Intel as of today, and so we can determine, where is a better dollar spent going forward. And here I've stacked up some basic income numbers coming out of Yahoo. And we'll start at the top, trailing 12 months revenue. Intel made $79 billion over the past 12 months. AMD is $7.65 billion. So Intel in this example is, 10x the revenue in billions of dollars that AMD's making. Revenue per share, they triple it on revenue per share. Quarterly earnings growth plus 22% for Intel, and AMD, and this is where you get the AMD hype, their quarterly earnings growth is 350%. So very substantial earnings growth for AMD, a lot of positivity flowing there. Down on the balance sheet, we got $25 billion in cash for Intel, $1.78 billion for AMD, and on the debt side, you have $38 billion for Intel and just under $1 billion for AMD. So I would say AMD, pretty impressive that they're doing this without accumulating a huge amount of debt. On the flip side for Intel, the $38 billion, somewhat relative to the amount of money they're making, although it will be important to keep track of capital expenditures to make sure that they're maximizing their opportunities with the debt load in that range. All right, so let's take a look at the TipRanks dashboard to kind of figure out what are the top-ranked analysts saying about both Intel and AMD to see maybe where the opportunity is. Shout out to TipRanks as always. I'm a paid subscriber and use it to go deeper on stocks with information that goes well past Yahoo or CNBC. My affiliate link's in the description if you're interested in checking out the service and potentially supporting the channel. On the Intel side right now, we have 8 buys, 14 holds, and 7 sells. So a lot of mixed feedback in there. On the bright side, you do have a median price target of $59.07. That's up 23+% from today. You got a high bar of 82 and a low bar of 46. So really, the sort of average across the board here, most analysts are saying hold the stock, right? You got some buyers, some sellers. Most are saying hold. So if you're in this stock already, it's probably just a better idea to not sell at the bottom, maybe add some positions to lower your cost basis, and then wait it out. Intel is a $79 billion company in terms of revenue each year. They're not going out of business, okay? They're not crashing. There's a lot more to this game than just jokes about, is Intel can't make as fast a processor as AMD. Try to ignore that noise. All right, now on the AMD side, we have 12 buys and 11 holds. So much more towards that buy signal, at least from the analyst pros out on the street. You got a median price target of $75.95. That's actually down just a little bit from today. I looked around for some more recent ratings on AMD. Most people are in that $75 to $80 range. So there's not a massive amount of upside in the short term for AMD. If you're investing in them, obviously, and Intel for that matter, if you're investing in these companies, you're obviously looking for 3 to 5 years. It's very unlikely that a chip maker is going to skyrocket to the moon out of nowhere. It's a very interesting market, and it ebbs and flows with capital expenditures, people upgrading desktops, laptops, etc. So definitely don't jump in chips unless you think your particular chip maker is going to come out with the next best thing that serves a much bigger addressable market than, say, like gaming. You need to have a huge win that would like go into an automobile or server stacks or, you know, everyday laptops to really make a huge gain in a single year. All right, so what's the bottom line here? I think, at least for me, it's hard to ignore that AMD continues to preach positives while Intel, at least from a product line perspective, sort of stumbles here and there. But to be fair to Intel, they are the market leader. Their revenue is 10x what AMD has today. And as the market leader, keep in mind that they have options that AMD doesn't, right? So if you get to this realm where people are saying, hey, AMD's processing power per price ranks this and this, which is better than Intel. Intel, as the market leader, can fix that problem pretty quickly. Okay, they can slash their price. Their profit margin is higher than AMD right now, so price isn't really a game that AMD can play, but it's certainly a game that Intel can play. Also for Intel, coming off the back of this earnings report, they did some shakeup to their executive leadership. They changed the way certain departments are reporting, and whether or not this results in any sort of changes to how quickly things are built, I think the writing's on the wall for a lot of people who have been sitting on their hands at Intel. Like, this is not acceptable to continue to miss targets. As far as the 7 nanometer chip miss and pushing that out to 22, in my mind, I struggle to see this as a real backbreaker. While the chip game is always about fastest moving pieces and parts to get information from here to there, at the end of the day, the bulk of the market is not high-end users. The bulk of the market is also not early adopters. You think about Core 5, Core 7 chips that Intel's been making for several years, that's still being put in the vast majority of the new laptops that are being sold. So while the future is important in chip land and you constantly have to be pushing for the best results, I'm not so sold that this 7 nanometer phase is going to be something that next month tanks Intel's stock from a sales perspective. Now on the AMD side, you got to stand up and clap, because they have done a great job not only of turning around their company, but of keeping the positivity going. They're growing their market share, they're putting dents in the Intel armor, but they've got a long way to go. If you want to bet on the AMD train, you're basically betting on continued success for, say, 5+ years, where they make an adequate dent in Intel's market share and people start turning around. You also have to start getting into the big vendors list, like who's running data centers, who's running phones, who's running automobiles, which chips are they choosing for their integrations? Are they leaving Intel and going to AMD? Right? Those are the big wins. We've seen a lot of hubbub, if you will, with Apple and Microsoft and Amazon. Do these guys start to make their own chips and just get away from buying from suppliers in general? If that happens, both of these stocks are going to get hurt. So it's not a clear path to success for AMD, and that's the only caution that I want to call out here. They have the momentum. Okay, but there's a lot of work left to be done. It's not a shoo-in. And finally for today, the easiest way to get exposure to both of these stocks and throw in NVIDIA on top of it is one of my favorite ETFs, QQQ, the NASDAQ Top 100. So if you're like me and you don't want to read chip headlines every day and figure out which way one is going over the other, or wake up once a year and see a chip company drop because they had a single bad earnings call, think about investing in the QQQ to kind of get some exposure to the chip sector while not having to ride through the lows of a couple people missing their earnings. All right, guys, hope you enjoyed this video. Please give me a like and subscribe. I'll see you on the next video.